We all know in the ranching business, it's a numbers game. I think the question is, what numbers should you be looking at? And our next speaker is going to share on what are some key ranching numbers and indicators that you might want to pay special attention to in your operation. That speaker is Tyson Johnson. Tyson comes to us as the general manager of Sooner Cattle Company in Pawhuska, Oklahoma. He is a native of, I'm going to say, the Utah-Arizona border. If that seems, actually has a degree in agribusiness from Arizona State University. Went into ranching for himself privately after school. Then attended the King Ranch Institute for Ranch Management, graduated from that program, and then went on to be employed by Deseret Ranches. He spent time in Texas, West Texas specifically. It's quite a transition there, coming from Arizona, and then ultimately ended up at Sooner Cattle Company here the past few years. He's led several progressive changes, an intensive early weaning program, a high-density, low-frequency grazing system. He says he enjoys the science with the business while leading employees and really enjoys the art of management. And so we're very fortunate to have Tyson on our program today. This is his first time at Kansas State University, so I'd appreciate it if you give him kind of a warm K-State welcome. And with that, I'd invite Tyson.
Can you hear me? Yeah. I'm just going to do this. Perfect. Well, I appreciate the opportunity, and it's an honor to be here. I decided to stand up here behind the pulpit so you wouldn't see my knees knocked together. In fact, Mark, the company has a long relationship with the Gardners and with Mark. And when I showed up at the Triangle Ranch there in West Texas, but I did have a little bit of a problem, Mark. It was such a good presentation, I think I've forgotten mine. So I might have you come give my presentation as well, and there's no doubt that I know that he could. Has come down to the intern, and this last spring, I guess, brought a tour of the ranch and visited the ranch. I was gone that day, but so with that said, one thing I do enjoy when someone gives a presentation, and Mark did this as well, when they share a few stories in my life as we go through the presentation. And I'll start off with this one. I was given and I don't do a lot of presentations, but I was given one at a certain venue, and I think mannerisms. I said, I don't understand. What do you mean? He says, no, when you present, you make a point over there and a point over there, and just a lot of bowling. I'll also say the topic that I'll be discussing is managerial accounting. It's somewhat subjective, and I may go over some. So you're right. I'll just get that off, up front. But in fact, I haven't been in Oklahoma long enough to really admit that I'm an Okie. So it's a beautiful part part of the world, very picturesque. But I am enjoying my time in Osage County of Oklahoma. And one reason why we 7 cows, 10 cows per section. Cowboy math, a section is 640 acres. So it gives me a very I'd leased a ranch about 200,000 acres, and on that 200,000 acres, I ran about 1,000 cows. Sooner, we're about half the acres and about 10 times the number. So it's very one thing about he was a very seasoned presenter, but I will say he has a few years on me, and I don't know what demonstrates stress more. Just a cowboy that enjoys business. So managerial accounting and some key numbers that we need to know at the ranch. Being a business, growing up in a successful business, a family business, and being on business or in business for myself, and then coming to work for a successful company. To understand managerial accounting, I just want to give a brief kind of system. And it can be somewhat confusing when people talk about the different accounting systems. But basically, all accounting systems are designed to feed into these 3 statements. There's really 4, but 3 main statements. And from these statements, you can derive a lot of management decisions. A balance sheet basically determines someone or a company's wealth or worth, net worth. Income statement measures profitability, and a cash flow statement is just that, cash. So all accounting systems are really designed to feed into these statements. Well, managerial accounting is basically, in layman's terms, it's pulling information out from that accounting system to give you the numbers that you need to make. The problem with that is that we all have a little bit different objectives or goals, depending on our business structure and our business model. Somebody that's leasing a ranch and is paying a lease on a per head basis, or numbers. Use this as an example when we talk about weaning weights. Do we use the weaning weights that we hear at the coffee shop, which never include the cuts, or the true weaning weights that of managerial accounting? I want to do this quick brain teaser. A guy walks into the store. Starts off like a bad joke, doesn't it? And some of you might have seen this. A guy walks into the store and steals $100 without the owner's knowledge. He then buys $70 worth of goods with the $100 bill. The owner gives him back $30 in change. How much money did the owner lose? Pretty simple, right? 170, 200. We all done the math in our head? What about the ultimate graduate student answer? It depends. Huh? So when we calculate this, do we calculate that? How do we calculate it? If they're different, if he stole different goods, do we calculate the profit margin in the different goods? What about the inventory system that the store owner was using? Was he using a first in, first out, first in, last out, LILO, last in, last out, LIFO, last in, first out, or just a standard cost to keep track of the cost of inventory? What about opportunity cost? How are we going to calculate that? Or time value? A simple problem, or very simple story turns into a very complex problem when we really want to dig into the numbers. And this is a little bit of a problem when we talk about managerial accounting, and you ask, what's it cost you to run a little off topic, but one thing that we do at the ranch, and a system that we've implemented at Sooner Cattle Company, and this is something that's very beneficial, and it's something that was kind of, I was raised when I was with my grandpa, and he would go pay for whatever we were buying, and I'm sure you've seen this. You go up to the cash register, pull out his wallet, look around to see who's looking before he opens his wallet. He didn't want to have anybody see how much money he had in his wallet. A very secretive generation or secretive environment that I was raised in. And so to be completely transparent was hard for me to get used to, coming to work for the company. But I've learned the value of transparency, and mainly with employee engagement. Life is a lot easier when we have the freedom of choice. When we have the ability to make our own choices, then life becomes easier. And so we've tried to implement at Sooner Cattle Company all those things. The employees can get into the numbers and the accounting of the ranch and be transparent enough that they understand why decisions are being made. And they also have the ability to get developed so that they can. So this system I really like, and it deviates a little bit from the accounting side, but I'll show you how it ties in. So we start off every year with a strategic plan. We know the company's goals and the company's objectives, so we start off with a strategic plan that everybody gets involved in. And we add action items. Okay, we have about 10 camp guys at the ranch and 2 foremen that oversee those. So that strategic plan feeds into a resource management plan. Each camp guy has to come up with a 3-year mainly facilities and pasture. What he wants to treat chemically, what he wants to burn, fences that he wants to fix, facilities or anything that's to the ground, the corrals, the barns, those type of things. And then also equipment. This is the long list of I want to know. And then that rolls into our budget. We do a zero-based budgeting. I have to budget for every dollar every year on the ranch. And every ranch manager does the same. And the reason that I found this system valuable is because I got tired of Cowboys to me and saying, Tyson, I need this. Can we do this? Can we do that? And so I wanted to empower them to make those decisions themselves. And so I can go back to them as the manager and say, on your resource plan, you had project X complete project. Now, obviously, this isn't a wish list because we have a very strict parameters that we have to hit, mainly on a cost per pound produced. And we budget for a certain net profit. Of course, that's always projected, and it's hard. But we know, as far as we have enough historical data, that we have a good idea of what we can produce on a per pound gain basis, right? So this is one thing that I wanted to share with you, that I think we may be unique, and I don't know how many of you do something like this similar. And I've really been amazed at the strength that transparency brings to employees. And the biggest thing it teaches these guys, and it really stands out to me, is on the financial side. The ability to make that step from being a cowboy to a manager is side. So along this, from that budget, and this is probably a shocker, is I hand out or email out a 52-page report every month and this is a very detailed report. We have the financial system so we can find out what every person spent in every camp, in every line item, and everybody sees it. Obviously, there's a lot more to this report than the very detailed pasture reporting system where we measure animal unit days and animal unit days per acre. We measure days rest on each pasture on the ranch. We're a big stocker operator, so we measure all the metrics that come with that, our treatment rate, how case fatality rate, obviously, morbidity rates, mortality rates, and then also a very detailed feed report. And we'll get into the cost of feed in a little bit, but I want to know every pound that was fed every day, every month. Demonstrate that. And this has obviously been years tweaking this package, this reporting system to hand this out, but it's done with very little effort at this point. The other thing that I want to point out that I found was very bad. Think about this. We're a growing company. We're always looking for future managers in the company. And it's interesting to me as I hand these reports out, how many of the cowboys never even look at them, and how many of the cowboys ask questions. I've learned as you're looking for leaders or managers, they kind of filter themselves. We just have to give them the tools and the information to do so. And it's a side note, but it was a very powerful lesson to me to see how getting into cost, and I'm going to skip through some of this stuff due to time. Understanding cost and understanding how costs react to our decisions is probably what I feel is probably the biggest step for someone to go from. We always learn, and I learned in school, a fixed cost and a variable cost. But in truly, we have two different types of cost. We have a direct cost, which is something that goes right into the animal. And in a cow-calf operation, there's not many of them. Feed, vaccine, deworming, we pay on a per head basis. But there's very few direct costs, but some of them are very big. Feed, and we'll look how it breaks out, is a very large cost. And so you manage direct costs one way, and you manage indirect costs, which I call indirect costs. They're managed all the same way as basically big overhead type costs. So direct cost, you manage as a marginal cost versus marginal gain, right? Trying to find that optimal level of how much cost do I put in the animal. Okay. And there can be a lot of savings as you manage this way. It was interesting as we were going through budgets last year, we had quite a conversation about, I was new to the ranch and some of the foremen felt like we should feed all the day help lunch. Conversation of what's the right thing for the culture and how much money we spend, and I thought we were spending a lot of money, but at the same time I was calculating my feed budget, and I had calculated that every penny I saved, if I could negotiate that contract by 1 penny per pound, it saved me over 150. We're going to budget X amount of money, you guys manage that, but I don't want to spend any more time on figuring out how much money we're going to spend on feeding day help when we should focus on the big things, like how are we going to save $150,000. That marginal cost is managed a little different. It's usually about 30% of our operations, depending on the structure of our operation. The big overhead type cost or all other costs, really we can only do four things to manage those cost units. That's the biggest way to decrease your unit cost of production is spread it over more units. We can improve our process. We can come up with innovative ways to do something better. And as I like to quote, and if you read those articles, then one of his common sayings is wage war on cost. Just try to wage war. This varies with the type of accounting. To tie it back into accounting, I was managed some branches for a very successful businessman out of California, and he was talking about he had a bunch of new equipment. And I made the comment, I says, man, that would be nice. And he says, yeah, David buys all this new equipment because he needs the tax write-off. And shows you a good, somewhat antagonistic relationship between the different types of accounting. What's our parameters? Are we going to be based on, of course, his own personal finances? We're based on after-tax income, on tax account, income statement, and net profit. And we know what a big killer depreciation is. If we break down the cost, we can really break down almost 50% of the cost in these big three items: depreciation, feed, and labor. And which ones of those are direct costs and which overhead type costs? And some of it depends, right? Depreciation, cow depreciation is a direct cost. When you pull a 4 or 5-year-old cow out of your cow herd, you know exactly her book value. Depreciation on a tractor, on a truck, is a big overhead type cost. And so there's some there. I want to dig into some of the tools that I've learned to help us in some financial analysis work. And a sensitivity analysis, I don't know how many of you have ever used one of the official tools. And basically, if you really want to know what variables make a difference, then run a sensitivity analysis on them. And these numbers are just arbitrary numbers I just made up and threw in there. But basically, it tells you whatever variable you want to look at, if everything else stays the same and the weight changes by 10%, what does it change net profit? Or if you want to look at winning weights, whatever variable you want to look at. You can look at the cost side, or if we're doing an analysis on a new acquisition, one of our parameters that we use, and you can look at land value, how that purchase price affects the net present value, and how sensitive that is, or what variables are really matter to the success of the operation. And that goes back to the conversation we had during the budget. What variables really matter and what do we have to focus on? Net present value is another tool that we use. It's one of our parameters, and it's the main parameters we use when we look at acquisitions. And the one thing that I really like about the net present value, it creates a situation where you can compare different projects or different opportunities as apples to apples. So it takes, if you're looking to buy a grow yard or maybe put in a grow yard, or you have an opportunity to buy a farm, or you want to put in a farm, resources, you have to decide you can take two separate projects, and they might have a different lifespan, and the net present value calculation will put that so you're comparing apples to apples. So the net present value kicks out an eternal rate of return. What you're going to make, your cost is discounted rate. It may be your required rate of return, what you want back, or maybe what you can borrow money at. So it's a different variable, but it also includes time value of money. So you can take projects that have a different lifespan as of today. You have to be mindful when you run a net present value that it has to be based on cash flow. Because time value of money is part of the formula, then you have to calculate when the money is spent. So this is something that I've used on very things? Is it better to have lower cost and longer longevity, or higher cost or higher revenue with shorter longevity on cows? I mean, you can use this thing for a lot of different scenarios. I'm going to tell you a little story about my dad and the environment I was raised. I consider my dad has been fairly successful in business. He's not a Bill Gates or a Warren Buffett with a $300 student loan. Today he owns several big ranches. He does business, construction business in Alaska to business in Mexico. Has very successful in my eyes. I still remember coming in from the ranch. I was probably 10 or 11 years old. And I can remember my dad looking over and saying, "Tyson, do you know why I like cattle?" "Why is that, Dad?" "Because they make money while you sleep." Obviously, but that's how he thinks. And if many of you have read the book Rich Dad, Poor Dad, when I read that book, I thought, man, this is just like listening to my dad. So been very successful in business. And I've seen him do many business transactions on a yellow notepad and a calculator. To this day, he doesn't know how to turn on a computer. To this day. And he's still blowing and going. He's still doing a lot of business. I'm a technology guy. I like technology. I know technology. I've got two older brothers, the family, or brothers, one older and one younger. One is a financial analyst for Ernst & Young and has come back with the family, and the other one's probably one of the best ranch managers that I know personally. Calculator and the yellow notepad, we just know that it's all over. And the thing that I've learned from that is it doesn't matter what tool we have and what tool we use, the very first and most important step is, and I don't like the term, but I quite often, trash in, trash out. If we don't put in accurate numbers and if we don't know our numbers, then everything else doesn't matter. So make sure we know our numbers and make sure that they're correct and accurate. So what are they? To sum it up in layman's terms, they're pulling numbers out of the accounting system that are going to help us make day-to-day decisions and measure our success on our operations. And so this may be different for all of us because we may some of the big that we use at Sooner Cattle Company, obviously stocking rate. When you're talking about cost and spreading cost and over units and minimizing unit cost of production, then source advantage. But it's amazing when you run a sensitivity analysis on stocking rate. Margin per acre. Our investment is in the land, and so we want to know what the land's producing. We're very big on margin per acre. We look at the per cow side, but really in our system, it comes down to margin per acre. We look at the cattle margin per acre and then the non-cattle margin per acre. If you have a successful wildlife operation, or there might be some minerals or whatever it is, but margin per acre. Obviously, you have to watch keep a close eye on that. Percent system yield. It's important for us to know how many of our animals get, and we call it throughput. Of course, we own a feed yard and we're vertically integrated, so animals leave the feed yard. For me at the ranch, when it leaves the ranch, what percent of that are we harvesting? Weaning percent, obviously a big number. Pounds weaned, we look at it obviously on a per acre basis, on a per calf basis, and that's probably per exposed female is probably the best number that I use to measure that. And then obviously there's safety. We're big on safety. We talked about this, Justin and I were talking about this this morning at breakfast. We just can't afford that. So we measure safety and watch it very close. At the ranch level, I just have to say we just measure everything. You know, we have a great accounting system and we just measure everything. But some of the key points that I talked about before: pasture, chemical treatments, burns, soil sample, forage samples. Some of our cost, we measure cost per head and cost per pound produced or gain, and that's probably a big one. That's probably our biggest number. At the end of the day, that's what we're getting paid on, and it's hard to calculate a value of gain and a break even if you don't know your cost per pound gain or produced. Animal performance on a per acre basis, and then also on a per as far as just KPI on the ranch. I want to leave you with this. The application of accounting, and I'll tell you this story, and many of you are probably familiar with this. When you grew up, or when I grew up, you'd go to the grocery store, and the cost of the product, set down a little belt or a slide, and you'd have a bag boy down there that would bag your groceries, right? I remember the day, and I'll use Walmart as an example because that's where I was. I can remember the day I walked into a Walmart and recognized the little wheel or carry possible to buy your groceries. And it hit me, and I thought, I wonder how much money Walmart made on that one little change. Who was the person or the team of people on KPI to come up with this idea? How do we cut down full-time employee per, however they measure it? I don't know if they measure it on a per customer base or per, hundredweight or whatever it is. We measure full-time employee, so that's our goal at the ranch or in the company. But somebody somewhere was looking at the numbers to come up with this innovative idea. And I got thinking about it. They've had grocery stores forever. It takes so long to come up with what I would consider very simple now that we have it, But this is the application of accounting. Where are we going to? Pretty soon we're our own cashier, we're our own bag boy, Numbers, looking at KPIs, and taking the action, applying those numbers. It leads into one of my favorite quotes. Knowledge without practical use is a lot like a glass eye. It's all for show. We can have knowledge and really it's only good for an intelligent conversation unless we apply it. It doesn't matter if we don't do anything about it. So to wrap up, some of the big key take-homes that I focused on is no matter what we do, they need to be correct and accurate. Understanding cost. One of the biggest hurdles when we try to develop somebody in the company or on the ranch from a cowboy to a manager, one of the biggest things that I struggle with, or the biggest cons, because they're different costs and other overhead type costs. KPIs. What are the KPIs that are relevant for your objectives and your goals? And the application. It's a mindset, right? It's a mindset of action, knowing I have one more thing. And I'm going to end with this story. When I graduated high school, my senior year, I decided that I was going to go in the cattle business. I went to FSA and got a loan. And by the time I got that, borrowed money to buy. My dad did give me some calves growing up, I think. You know how that goes. Turn them out in. Pull up. Into the and so of it also about persevering, about recovery, and about keep going. Once again, I appreciate your time. Thanks.